What's up guys, what's going on? I hope you guys are all doing good and welcome back to Bosskayz FX Forex group. We really appreciate it guys to have you back once again to our YouTube channel, and we'd like to thank you all who just subscribed to our YouTube channel. If you have not yet done so, please kindly hit the subscribe bell and turn on the notification icon so that you will not miss out our new concept when we upload our next video. So guys, in today's video we're going to show you the most simple forex strategy that works every time, and also this strategy can work in each and every time frame. Just have to follow the steps which we are going to show you in today's video. So if you are new here and also looking forward to learn about smart money concept, ICT concept and order block strategies, welcome to the family. So guys, in forex trading we have two patterns. We have what we call a continuous pattern and a reversal pattern. So as we are going to show you a continuous pattern, not the reversal pattern, and this pattern can make you a profitable trader, also to be a consistent trader. So what you have to do is just to follow the steps which are going to show you in today's video. As you can see here guys, we have what we call a swing high, and this is a swing low, and then this swing low have taken out the previous swing high, creating a new swing higher high. So when price give you something like this, you expect the price to give you a reversal coming back to the order block or to the demand zone, meaning here as you can see at this swing high, sometimes the price will reject, right? Because it's a high, that's where we find our supply. So the price will reject, and that rejection candlestick will now become our OB, because the price will go and break the structure, meaning it will now become a demand zone area. That's where you expect the price to come and pick the orders and continue going up as a continuous trend. So they'll keep on doing the same thing. But as you can see here on this pattern here, which is on our right side here, it's when you go to smaller time frame, meaning in smaller time frame you find a lot of structures. But to make it simple, let's say the price have given you a high, this will be your high, right? And then they'll go down, meaning they'll go down to the first OB where the price decided to continue going up, or where the price have decided to give you a rally first. So they'll come back there and pick the orders and shift the market as a continuous trend. So they'll continue doing the same. So what you have to do is just to follow the swing high and the swing low, and you have to understand the OB which break the swing high. So without wasting your time, let's go to chart guys and show you the examples. So as you can see here, we have GBP, USD, and you can see guys, the price have given us this break of structure, right? This is a break of structure, and as you can see on our left side, we had a demand zone area, which is this one. That's where the swing the swing high was at the swing low, sorry about that, the swing low. And you can even see there was an opposite candlestick right there where the price decided to come, as you can see. Right here guys, there was an opposite candlestick, meaning this one. So even if you wanted to use your premium zone in discount, something like this, as you can see, something like this, right? This will still be your demand zone area. So let's go to our right side, see what the market have given us. As you can see, the price went into the demand zone right there, right? So now let's go and give you a back testing moment, right? So now let's cut this zone and go to smaller time frame like 8-4 time frame, because 8-4 is much better, is a higher time frame to use as well once the price come back to your demand zone area. So as you can see here guys, we had this swing high here, right? And this swing low was being taken out guys. As you can see, the swing low was being taken out here guys. So what you are expecting we're expecting the price to come and break this structure, meaning they'll give you a reversal pattern. So now let's play and see what the price will give us. As you can see now, guys, the price you've taken out the structure, right? And you expect the price to come back to the OB, which break the structure. And if you see this opposite candlestick, you mark it high and low. Now you understand this is your what? This is your demand zone area right there. So this premium and discount is no longer used to us. If you want, you can use H1 time frame, right? You can use H1 time frame. As you can see, we also had that last candlestick where the price decided to go up, but me, I use 15 minutes because that's where I take my trades. So as you can see, in 15 minutes we had this last opposite candlestick, which is this one. That's where our OB was at. But as you can see, if we are able to risk, or if we afford to risk this kind of pips, this is like 21 pips, and the ratio reward will be the ratio reward will be 50 pips, right? Risking 20 pips to get 50 pips. But if you want, as you can see here, we had an opposite candlestick, meaning this was a good order block zone area, meaning you'll be risking 9 pips or 15 pips. That's what I usually use as my SL, and the take profit was going to be 15 pips. So meaning this demand zone will no longer use to us, we're going to use this one. So the price went into the demand zone, picked the orders, and shifted the market going up. Now let's see what the price will give us, right? And as you can see, price is going up, giving us those compression. So as you can see now, guys, we also had this lower high right there, right? This was the lower high right there, and that lower high was being taken out, meaning we use the last candlestick or the last opposite candlestick. But as you can see here, that's where our last candlestick was at, right? That's where the price decided to go up. And if you go to H1 or H4 time frame, you find out that there was an opposite candlestick. You see a bearish engulfing candlestick, and this is a bullish. So in H1, you find, you see, now it now became clear. You find this is a base area, and this is a bearish engulfing, a bullish engulfing candlestick. Sorry about that. And then the price took out that zone, and then you're expecting the price to come back. So if you are going to add another entry, meaning this was going to be your entry zone, right? And this was going to be your SL. If you want, you can use 15 or you can use 10. It's up to you because it's a second entry. So now let's use the same target as we are using the last high. Let's see what the price will give us. As you can see, price is giving us compression, going up, coming back, as you can see. Okay, so now guys, as you can see, the price went into the OB, then pick the orders. As you can see, price is going up. So even though we wanted another entry, meaning this was still good, though, you can even use this last opposite candlestick. So it was still good to use your second entry, right? You can even still hold the second entry. Let's see what the price will give us, as they have given us a breakout structure. Now, as you can see now, guys, right, the price have taken out the structure right there, and this zone area was never being tested, right? Meaning we'll continue using this because now the first target was being taken out, as we are looking for a continuous trend right there. As you can see here, this is where we'll find our first opposite candlestick in what, in bigger time frame. Let's say, you see here, that's where the price decided to continue going up, and this will now become our targeted high, as you can see here, guys. See here, and here, that's where the price decided to go way up, meaning we use the last candlestick, which is this one, as you can see. And if you go to smaller time frame, you find out that this was the last candlestick right there. You see this one. So use premium and discount as it was a big candlestick, something like this, if you like, and this will be what, a demand zone area right there. And me, I use my 15 minutes for my entries, so it was still the same thing. We're going to use the last candlestick, meaning we're going to use this one right here, right there, and our entries was going to be here. And as always, I use 15 pips as my SL, something like this, as you can see. So now let's see what the price will give us. Let's see what the price will give us, right? Okay, as you can see, the price just came and picked the orders, and this was our target, as you can see, because that's where the last supply was at, meaning we're risking 15 pips to get 70 pips, meaning that was going to be a good trade though. And then the price continued going up, as you can see. Now they've even taken out the supply, meaning this was going to be our last opposite candlestick. That's where the price decided to go up. So what you do, if you're able to risk such here, let's see how many pips is that. That's like 51 pips, but you can even minimize by using premium and discount, right? Premium and discount, something like this, meaning you're going to put your entries around this zone here, and then your SL here is much better. That's like 30 pips. So the target now, you look for the nearest supply zone area. So as you can see, with this supply zone right there, meaning we had almost like let's go and see, we're going to risk 30 pips for 100 and something, right? So let's see what the price will give us. Let's now delete the premium and discount so that we'll keep our chart clean, right? And this is the demand zone which we're going to look for our entries, right? Let's see what the price will give us. You have to be patient as always, guys. You have to be patient enough so that you always take your trades in the right market structure. So let's see what the price will give us. Okay, the price is continue going up, and as you can see, the price have given us that rejection candlestick. Let's see what the price will do. Price failed to come, so they just respected the bigger demands on something like this. So the price continued going up. Let's see if they will continue and go and break the structure. So if you're going to risk more than 50 pips to get 118, it was going to be a good trade though. But some of us or some of you guys don't have that much accounts to risk. So if you go and check the link below down down description you find the platform which we use to get funded, and you'll be able to get funded and start trading the big accounts like 10,000 and 20,000. For maybe 200, you pay 200. Just have to pass the challenges. So as you can see, the price continued going up, meaning this was a good trade if you were going to risk this such of amount, and then the reward was going to be a good trade. So that's how you do and that's how you take your continuous trend. As you can see, the price is continuing coming back to those, right, the last opposite candlestick, meaning this was a break of structure. The price will come back to the last opposite candlestick. As you can see, here was the demand, right? Let's see what the price will give us there. There was the last candlestick. As you can see, price came back in, shifted the market going up, which was going to be a good trade, as you can see, guys. So I hope you backtest, and this video may help you. And also don't forget to join our Telegram group for free signals and free setups. You have a blessed day. Thank you.